Thank you, everyone who's here listening. Before we start, full disclaimer. We are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help. Also, due to the content of the show, this is for mature audience only. Welcome to the Hustle, the Struggle Investment Podcast, where two regular guys not from Wall Street come together and simply talk stocks and investments. We're here to give you the raw and uncut stories of an everyday trader. Tune in and zone out. Let's talk money.
2-second pause. That's about it. Okay.
You ready?
I'm ready.
Yo, what's up, everyone out there in the world, all the listeners. So happy that you guys are here today. Welcome to the Hustle, the Struggle Investment Podcast, where we're here to talk about the real and raw cut stories of being an everyday trader. So this is your host, Herbert, and a friend of the host, David.
Hey.
Oh, sorry about that. Did I interrupt?
No. It's a new thing for me.
Yeah, so we're on episode 6 today, and the topic for episode 6 is why to invest. So from a few episodes, we talk about various things, our trading experiences, to keep you cool when buying stocks. That was the last episode, but we never really touched on what's the purpose, why get into it, why believe in it, justify the reason to why to get into the stock market. So, would you like to lead, Dave? Or
wow, you're always throwing me into the pit right away. Like, oh, hey, there's a dark hole. Why don't you go check it out first? You know what? I'm just going to throw the most obvious out. I guess it's to make money. You know, we all have our reasons, but essentially at the end of the day, I think largely in part it's to make money.
Yeah.
Yeah.
No, for sure. And I would agree. Yeah. So why you want to invest? To make money. But to extend all that as well is you want to make a nice amount of money. You want to make aggressive growth when you talk about savings. I think I might have mentioned this in an episode before, but even if you have intent for short-term gains, you always want to think long-term. So the purpose of making money is making money, but leveraging out just your wealth in general.
Yeah, you're right. And you know, some people like the challenge of making money, you know, in this way, I should say, you know, rather than working. The allure of making money, you know, this relatively seemingly easy way to just make profit.
Uh-huh.
And then, there's probably some other things as well.
Yeah. But you know what's funny though, actually? Us being day traders, like I'm realizing that
every time we talk, this ambulance goes. Next week with our regular host, Herb, Dave, and the ambulance. Yes, Mr. Ambulance, we get your point.
Yeah, I forgot my point.
Or just start it again. You started something funnier.
But yeah, the thing is, us being everyday traders, there is actually a lot of work involved. So yeah, like the notion. Well, I think the what's the word that I'm looking for? The facade of investing is working less, making fast money, making money just by a click of a button. You know, I think that's how we kind of see investing now, or rather how it's sold to us. But no. There's actually a lot of attention that's involved. We've talked about this before, timing the market, timing when it's appropriate to buy. And you and I, we know this, like last year, 2020 during COVID, waking up at fucking 5 a.m. to catch those pre-markets, that crazy volatility pre-markets.
Yeah.
Yeah. So sometimes you have to really get up early in the morning and make the right triggers.
It's like you're a farmer, you know?
Yeah.
Which is kind of funny. It's the last thing I think about investing, but you know, you're waking up at farmer's hours, you know?
No, absolutely. And then in addition to that too, if you actually are in there for short-term intent, that even involves more time because you're constantly checking the market to make sure that it's flowing fluidly like throughout the day. So not only are you waking up early, you're probably stopping a lot of things in your afternoon just to check the market or check the charts. So it's not as relatively simple as someone think it is, unless you have a very strong position and it's just everything is just all bull flying high, which is rare, but it's possible.
Yeah.
Yeah, but I think realistically, like there's a lot of attention that's involved. Not necessarily a lot of thought or labor, but definitely attention.
Yeah. I mean, yeah, I'm trying to think of, if there's anything else that basically doesn't give you as much as you put into it, So it is something, it is something you need to pay attention to. And maybe that's why traditionally people have always, and maybe there's so much more in the past, is like found people to do it for them, brokers or advisors. So
yeah.
I think now in the last couple of decades or less, it's more of a hands-on approach, less institution service, and more self-service, I guess.
Yeah. See, so we just dropped another dime notion. It's two variants of trading. So yeah, you have the trading when you maintain your own portfolio. That's the attentive part. You're responsible for your own diversification and what you trade, the amount of money and so forth. But then you have the situation when you give your money to someone else or put it in someone else's hands and they handle the account for you. So it's less work. But I still think there's attention that should be played just regardless. Because I remember this from past episodes. I mean, hell, we dropped a lot. Once you make that decision of putting your money in someone else's hands, you have to make sure like you trust this person. You have to have a good feel, a good read, get as much information and just know, what's going on with your money.
Yeah.
Definitely see like all the fees, the underlying fees, if there's any commission that goes directly to the person. Definitely with money management account. I know we talked about, I don't know which episode, but with the free commission in some of these platforms. But when you do have managed accounts, there's maintenance fees.
Yeah.
So just be aware of that.
Yeah, on that aspect, in pretty much anything in life, I think one of the questions you should always ask people when you're paying something and it's not that clear to you is, what's in it for you? You're obviously playing a role in this, and I doubt you're working for free.
Yeah.
So
that's true.
How much, buddy? Just tell me. Tell me up front.
Yeah, no, and it's cool too. Depending on what institution you go for. I know
that's true.
I know Fidelity and TD Ameritrade, the money managed accounts that they had, there is like a forecast projector or like there's a series of questions of asking like what's your investment goal?
Yeah.
And what are you seeking? What are your age, your bio, those type of terms. Like are you saving to buy a car, buying a house, or you want retirement?
In terms of, I've had those questions asked too, and they seem very generic. And in the terms of why do I invest? Yeah. Asking me like what my age is and if I'm married and that's it. It's like, you didn't even ask me like, anything, indicative of my lifestyle or like anything. You're asking the most basic of categories we can categorize any human being on the face of this planet, And you can come out with a tailored investment portfolio. Yeah, right.
Yeah.
No offense.
No, I know what you mean. I think just recently I might have seen, because I know with Fidelity, they have like these periodical reviews.
They should ask you, like, you see a hooker, a really really attractive woman or male, and you don't know if they're a prostitute. Would you buy it? You get a better sense of your investment style.
Get all the vices out the way, right?
Yeah, just get,
are you addicted to any drugs? And if so, do you have a coke habit, marijuana habit? Because it's all about expenses, right?
Or do you do coke? Fidelity, great questions. Yes,
that is a good question though. Actually, a good theory. Like to just kind of be realistic of what we really spend a lot of our money on. I mean, past the sex and the drugs, but like junk food and shit like that.
I mean,
whatever bad habits you have.
Why do we invest for money? But why do we need this money?
Yeah.
But yeah.
Do you have a gold digger girlfriend, or boyfriend?
Yeah. Are you having an affair?
Are you a sugar baby?
Yeah, exactly. Like those are probably, those are more insightful, if I was Banks should really be, honestly, if I'm going to invest and sometimes I do invest in banks, but if I am, I'm going to start asking these questions. Like,
they just better make sure they have that. Oh, prefer not to answer bubble.
Yeah.
I don't think anyone would want to confess that.
Yeah.
But no, I was going to say, I know Fidelity, they have these periodical update reviews. So like they'll just send an email and asking like, has there been any changes? Okay. And just recently I did notice that I think that they ask like, what do you have any like debt, like credit card debt, school loan debt, and all that other stuff. So if you include that, like the whole debt to ratio, how much money that you have that you're spending or saving and relative to what you owe. And I think that's a new thing. And I know in the earlier stages of me having the account, that was not a question asked. It's usually just like, what's your income, what's your occupation? And then, like you said, your age, do you own a house, car, and so forth. Very, very basic.
Ominous, man.
Yeah.
They're like, hey, everything's good. It's like, how much money do you owe now?
I know, right?
Are you sure you don't owe money? Are you sure?
Yeah. But yeah, I think another motivation to why to invest is, at least for me, it could be different for a lot of people, but it gave me a perspective on how businesses work and how business really grow capital. Like we think that it's more on a brick and mortar approach where it's all about the consumer buying and then that's the capital. But no, there's a lot of investors that's involved. You have angel investors and then you have private equity holders, board of directors, those so forth. So that like there's a chain of people that's eternally operating the business. And then that money goes in. The investment part is what creates the component, the product, which go to the consumer, and then that's added money. But then the money lost, of course, is like, let's say, returns, paying the employees, certain insurance policies and liabilities and so forth.
Oh, yeah. It's interesting.
Yeah. But if you want to know like why a company is worth billions of dollars, it's probably not necessarily the assets.
It's not all the hamburgers they sell.
Exactly.
It's exactly. You're right. This is whole finance. Yeah, you're right. That's something I learned as well more.
Yeah.
And maybe help fuel this reason why I invest is to learn more or uncover more. Yeah. Yeah, it's interesting to see the machinery, the economic machinery at work.
Yeah. Yeah.
And you're right. It's not something that people tout as like, definitely not politicians aren't going up and saying, I'm bringing back all these shareholders back to Connecticut to bring them back to the factories to do their shareholding. It's none of that bullshit. It's all like, they're not going to come back to the factories. They never would have stepped foot in them. But, they're probably 1/3 of the economic activity of some like big corporation is a lot of this financial indirect, what they primarily do, I guess. And I've always seen that. I've always wondered, like, why did GE start a bank? Why are these funny banks called chemical bank? This used to be an old thing, It's like these companies literally had so much cash, they didn't know what else to do but open a bank.
Absolutely. Yeah. Yeah. But then that gets into a whole nother conversation when you talk about Uber wealth.
Oh, yeah. It's like, maybe we're going on a tangent again.
Yeah. But, yeah. I mean, and this is just like the activist in me talking, but I think it's you can learn the possibility of wealth and understanding it, investing into the market. Give you the ideal of owning a business or owning something that you buy or attractive to. I don't know. I mean, just understanding how free market works. And I guess the reason why I say this is the activist in me talking is I'm just looking at, so many people that work for these companies, at the very bottom, let's say like at a retail level, very hands-on. But, like some people that don't have 401ks, they work for these companies with no pension plan. And these are all like investment attributes. Yeah. And I think that some companies, it might be like required, like you work with this company and you're allotted this plan. But then, there are companies where it's like you come in as a contractor and you work for years and you don't reap the benefits. Yeah. And just so many people just don't understand, it's like whatever company you work for, there's your opportunity to profit in a more expansive way than you just getting paid by the hour. So again, that's to me another reason why to invest. Invest to me, is if you're going to work for the company, that's a part of you, part of your time and what you give it. So you might as well own a portion of it.
Yeah, that's a tough one. You know, I've always viewed, at least, you know, I choose to invest, but I don't need to invest. You know, I don't think investing is necessary for survival. I think investing is kind of like that icing on top. You know, it's a very appealing icing, but
But do you think that you can maintain wealth without investment?
Thing is, like,
so let's say you made $1 million off a great item. Off a great idea.
Yeah.
But once you have that million, how do you maintain that million?
Yeah.
Just by keep selling the idea, or eventually you have to invest, right?
I think if you want to maximize it, you do have to invest. And to get there, I also do realize, you know, people have invested a lot of other intangible things such as time and energy, you know.
Yeah.
So to get that money, the return, you know, through, I guess, in the form of money. But is it necessarily important? So, like, it basically is like, if you meet someone who's not doing this, would you be like, whoa, you know, this is necessary. Like, why aren't you doing this? Like, would I feel compelled to try to tell this person that they need to, you work for a company, why aren't you investing in this company? You know, like, I've had that opportunity. I wouldn't say it's always panned out, because unless you're working for a pretty high profile company, then, you know, you're buying shares into them, and does that really help?
I'll be honest, David, I kind of disagree with that. Only because I'm saying that if I see it as if the opportunity is there, why not take the opportunity?
That's true. You're right.
If the opportunity is in front of you. Exactly. Yeah. And it's not like when you work for these companies and they do have like a 401k pension plan or any investment plan that's allotted, as long as that you don't have to pay any money, you lose any money in relative to actually having the account or the plan. Now, of course, there's always losses.
The matching plans are definitely worth it.
Exactly. But, my point,
you know, the 401, you know, where the employer matches, yes, absolutely. You know, there's a lot of value. And I do believe people should have a 401, you know. Very few exceptions where I would say you wouldn't, and only if you know what you're doing. Yeah. But
I mean, like, I would totally be skeptical.
But share purchase plans through the company, but beyond that, you know, I don't know, maybe.
Well, I don't know if this exists. I never came across this, but I was gonna say I'd be skeptical if my employer was like, hey, you know, if you open up this plan, you have to pay like $100 a month, you know, maintenance fee or something like that. Like then that's when I would agree with you. Like, I think it's skeptic, because why do I have to pay this? Shouldn't it be liable of the company? But again, I've never had
Someone's
that situation.
Paying someone for sure, but you're right. Yeah. Who ends up, you know, bearing that cost is your employer.
Yeah,
usually.
Yeah, but that's my thing. If the opportunity is there for expansive growth, why not take it?
You know what? You're right. Because investment is usually it's about opportunities. So it's just, you know, it's about being able to spot these opportunities for what they really are.
Yeah.
So,
and I actually want to drop another lesson. I'm not sure. I came across this situation. They have this thing in SF. It's called the BMR program, below market rate.
Oh yeah.
And so basically you can buy like one of these $1 million condos for half the price or even lower the price, below the market rate, basically.
Like normal price.
Yeah. And with this program, part of the down payment, you can actually use the down payment from your 401k. I don't know if this is just protocol for any down payment on any home, or is it just under this program? But I was going to say, and there's no penalty to use it, because you're making a big capital purchase.
Yeah.
So if you report this, there's no penalty for you to take this out of your 401k.
Oh.
So let's just say it's not under the BMR program. So for listeners out there, just do your research. I'm not 100% sure, but let's just say it's not under the BMR. Mm-hmm. Then that would be a huge opportunity and reason why to invest. Just as simple as having a 401k. With the company, because you mentioned the matching part. You're with a company that matched 3%, 6%, or whatever the amount is. Mm-hmm. Over the years, you know, you're not going to work with this company for a year and then just buy a house right away, depending on when you come in depending on what the amount of your salary is that you come in at. But let's just say you come in entry level, you know, it may take you a few years for you to really cap that amount. But then you have this 401k. Let's say you're with the company 7 years. You continually contribute along with the company matching. You have this set of money. You're ready to buy a house. Then boom, you make the down payment right in your 401k. You actually don't have to take it from your checking account, from your bank, hard cash. So
Yeah.
yeah.
It's
Yeah, I guess to say too, another reason why you should invest, leveraging your wealth,
Yep.
liquidity too. You know, it's not like the old days where you can keep all your money under a mattress, but you definitely want to. Well, I don't know. That's questionable because you do have consolidation. You know, some people like to consolidate, have it under one account. I guess I was just kind of thinking of like the possibility of theft, scam, or whatever you have your money in, the institution going bad. Like you hear about those horror stories, but what's the probability of that actually happen? Like how often does that happen? You put your money in a bank, you have one bank account with $1 million in this account, then the bank goes broke.
Well,
you know,
and for people who have that much money, you know, I know it happens for various reasons. You might have just sold some property or something like that, and well, still. Anyways, your bank is probably federally insured to a certain amount, but it's not in the millions.
Yeah.
So what I've heard is that some people had to like, you know, just to put their money and have it insured in an institution, they have it multiple accounts.
Yeah.
So just a little bit of hassle, but I mean, when you have that much money, you know, like that's not a hassle, right? That's not a hassle. A little bit of money can't solve, and you seem to have enough of it.
No, for sure.
But yeah, you know, I guess that's a really big. One of the main issues that you brought up is why people invest, and you know, it's just to get by on some daily things or help get by, you know, and actually personally I'm kind of hoping to, we'll see what happens, but I'm hoping to invest more. Yeah, that's an interesting thought. And actually what you mentioned you know, housing and people investing, you know, for various reasons, and one of them would be to like purchase house and stuff like that. That's actually something I've just recently, so yeah, I live in San Francisco. It's really expensive. And decided to kind of upgrade my living conditions.
Yeah.
So I'm hoping that I can, if I'm more diligent and more, I don't know, more active at trading, I can make up some of that difference that I now have to pay. So I have to pay like $1,000 more in rent.
Yeah.
That just comes right out of the blue.
Yeah.
And in the past, that $1,000 difference alone would have been rent enough.
But I think under your circumstance, though, like there is a level of talent that's needed.
Oh man, I used to have this. Back to why we invest. It's kind of, I mean, when I first started really investing, I used to just kind of joke around. This is going to be beer money. So this is kind of like when I was younger. You know, didn't really have a high paying job, but didn't rely on invest. It's kind of funny over the years as I, you know, get a bigger job, have more money to invest. My expectations of what comes out of it is the same.
Yeah.
But I don't know if necessarily my skills to accomplish that are.
I've definitely done that actually. I've done some short-term trades, like just to regain money from a bad night. Well, I wouldn't say relatively a bad night, but let's just say that I was under a circumstance where I spent a nice amount of money. Like let's say if I took a trip, spent $500 on a weekend or something. Yeah, I would rely on getting that $500 back, investing into the stock market. So instead of just working extra hours or doing overtime or picking up like a part-time job, I would just be a little more aggressive in the stock market, recoup the $500 plus whatever else I gain, and then of course just reinvest.
Did it work out?
Oh yeah, in some circumstances, yes. Not always, of course. Short term is always the largest risk, so nothing is ever guaranteed. But in some circumstances, yes.
Yeah, I've in the past I've definitely kind of been glad I invested for some things. So I remember having some tech stocks 10 years ago, less than that. They took a downturn around 2012, 2013. And I was traveling at that time, and my friend had a wedding, and I needed some cash, and sure enough. So I've always felt that, and maybe going back to your whole opportunity thing, you know, you kind of plant the seeds now and kind of hopefully kind of, you know, get the fruit of what you've planted later.
Yeah.
Yeah.
Yeah. And plus too, like, I remember from the first episode, I had mentioned how, you know, my first trading experience, when I opened up my first account, I was trying to look for something that's low risk as possible, but it had nothing to do with the account. Basically, it's all about, you know, your investment, your portfolio. But in the process of that, like there are low risk markets or investments that you can move towards. Mutual funds is a great example. Certificate of deposits. I mean, that's very low. That's more of just an interest gain. It's nothing really high with CDs, but still relatively.
Oh, man. Compounded CDs and a high interest rate, which probably people haven't seen for like 10, 15 years.
But I do believe in today's market, though, you have to have a substantial amount of money to really, really reap the benefit of a CD.
I mean, you know,
like you have to have like $100,000 that you're not willing to touch for a year or so.
Yeah, I think if you got like millions of dollars, a 1% gain you might actually, you know, be significant, you know. Well, 1% on $100, you know, you can get $1 over a year. Like or $2-3, right?
Yeah.
But
and then you have annuities. I don't really know much about annuities, but I feel like they're closely related to mutual funds. Yeah, but it's like a conglomerate of investment, right?
Oh, I'm not
conglomerate of shares. Yeah, I remember annuities. We should look that up.
I've been kind of things have really changed. I remember investing in mutual funds, but this whole fees and I don't know. It just seemed like a very scattergun approach to investing.
Well, that's why you have to do your research.
Shucking.
Okay, so listeners, I just did a quick Google search on annuities. So right now I just have the definition. I don't know if this is correct, but it says an annuity is a fixed sum of money paid to someone each year, typically for the rest of their life. A form of insurance or investment entitling the investor to a series of annual sums.
Oh, okay. Yeah, annual. Okay, so.
Yeah, but that sounds similar to a mutual fund, right?
It's like a CD, I think.
Yeah. But you have that. And then if you want to talk about like individual securities, then you have ETFs, of course.
Oh, yeah.
Yeah.
Yeah, there's a lot of ways and, advantages. And I think they generally say, the greater the risk, the greater the possible reward is. But, I don't know. They're just all financial products that are meant to still give the seller of this product a financial edge. So, whatever I'm making, I know they've made more than I have. That's all. And I'm not really, these aren't the things that are the most attractive to me. And I'm not greedy. So it's not like,
Actually, I have a question for you.
Yeah.
I'm thinking. So, if you have let's just say you're wealthy, you have whatever amount of money, you're in the millions, you're a millionaire, and you had a broker managing your amount that you have investing in the stock market, would you want a broker to manage your money who is worth more than you or worth less than you? And you have $1 million, you're a millionaire. So would you expect the broker who managed your money to be a multimillionaire as well, with possibly more money than you have, or they can just be
personally or managed?
Personally. Like just a personal financial advisor or broker.
At that point, I would like that person to be a friend of mine.
That's a good answer. That's a great answer, actually. Okay, but if he's a friend of yours, then I would assume that he probably would be just as wealthy as you.
Well, that's interesting. I don't know. Maybe it doesn't matter. I'm just really kind of simply saying that. No, even if this person, let's just say this broker person was actually in debt, personally, with financial ruin, but legally also they were able to, with my portfolio, managed to provide not only results, but results I wanted or I'm happy with,
Yeah.
Or even better, maybe something I'm just amazed at. Then I mean, I don't think I could pass judgment on that.
Yeah, it's hard to say though, right? It's hard to say because even if you do have an advisor that like know the ropes or the protocol or just how to work the market, but they don't have as much money as you do, then you have to wonder, well, if you know the stuff, then why don't you have the money that I have? But
I think a lot, I'm going to go out on a limb here and just say that I think a lot of high profile, like people like Kathy Woods, would or whatever. I don't think she has as much. Obviously, I don't think they have as much money as they're managing, because it's just simply more one person, and
That's true. You're right.
so in that sense,
Usually it's a team.
personal wealth.
No, for sure.
Yeah, and even personal wealth, they're simply a portion of what they're managing.
Yeah.
Never more than the actual sum.
Yeah, and this is a blind shot question, so
No, that's very interesting.
Yeah.
It's kind of like it's a flip side that I don't really, like if someone comes looking all hot shot and pulls up in a fancy car, like whatever, I could buy a car. We could buy a car and look that way, but
yeah, cool. Well, I don't. For me, I think I said enough.
How about you?
To should I answer my own question?
Yeah, I'm curious. Yeah.
Well, you said it best. I think if I was at that amount of money, I definitely want to personally know the person that's managing my money. Like, we have to be good friends, long-term friends. But I'll be honest, more than likely he'll be just as wealthy as me. But as far as, just to give a clear, honest answer, to be most comfortable of just one individual handling my money with the amount of wealth that I have, I probably would rest easy knowing that he's more wealthy than me. And the reason why is more or less of the trust and the scam. He's already fit and wealthy. Why does he want more,
I thought about that too, yeah.
Yeah. Whereas, if this guy, come in as entry level and he's like, man, I'm managing this millionaire. Like, I got to figure out ways I can juice a little more out this guy. I don't know. But, that's me being cynical, whatever.
Well, yeah, we all have our angles here, You're right. I feel the same way too,
Yeah. But relatively, you're correct. It really shouldn't matter.
Yeah.
I think realistically, if I was realistically in that situation, I would be more about if this person can do the job rather than how much they are worth.
Yeah, and I don't think I'll ever know. Even if it seems obvious, it may not necessarily be true, It may, even if it seems like it looks like that, I should say, it may not be true.
Okay.
Yeah.
Cool. Well, I'm thinking, again, I don't know if you have any more ideas on
why we invest.
Yeah, because I think I said the most prominent parts for me, in my opinion.
Why do you invest?
Yeah, I think I came into the market just wanting to make more money, figuring how to make my income stretch.
Did you need money at the time?
It wasn't that. Okay. It's really hard to give this answer. I have to give this answer like honestly, just straightforward. Being here in San Francisco, you meet a lot of uber rich people and wealthy people.
Yeah.
I don't have a privileged background by far. And me coming here and trying to integrate and be along these wealthy people, and when you meet these people with these big homes and you have an idea of the amount of rent that they're paying and they're able to afford it, you try to wonder, like, what makes them wealthy? Now, of course, it's not just the stock market. There's ton of other avenues, business owners, companies, inheritance, insurance, all type of things. But just being in this community, I guess, just kind of motivated me to figure out, like, why am I not like these people, and how can I get there? And I know, like, in my own opinion, you're not going to get there just working hard every single day. Yeah. Like, you definitely have to think outside the box. There's going to be great risk that's needed. And part of that risk for me was investing in the market. And then, of course, I have like entrepreneur avenues along with, working a job. But
yeah, I know. I agree. I could see that. Yeah. Thanks. I guess.
Yeah. What about you? Like, why do you invest just for yourself?
I don't know. It's been kind of interested. I didn't need money at the time. It wasn't like I had a lot of money. And at that time I didn't, I was coming out of or starting university. So
yeah,
at that, of course, just you're thinking about work, but you're not, you haven't been working. So it's a little bit different. I probably need money now, ironically, I don't know, but probably need money now a little bit more than I did then. And I have a better job now, which is kind of weird.
Yeah.
Doesn't seem to add up. I really need to check this out. But, wow. I know why. I mean, it's a little hard to explain, but this whole, I still view it as a game, So if someone says, oh, why do you like playing baseball or basketball? It's like, oh, I enjoy playing the game, or whatever it may be. And I don't think I really enjoy playing the game necessarily, but I'm still interested,
Yeah.
It's money. So obviously I'm not a particularly greedy person. And let me just say this. We've been talking about why we invest.
Mm-hmm.
One of the reasons why I know I don't want to become, if I invest, is greedy. I don't want to be jealous about what someone else has.
That's true.
I'm happy to, want it myself, but
yeah,
to be kind of
I'm glad you said
resentful toward others or whatever, evil or just not good. It's pointless,
Oh, absolutely. I'm glad you said that. I want to connect with that, not necessarily on the greedy part, but I can tell you personally, once I started to invest, when we just talked about like investing for beer money, or I would try to recoup whatever losses that I made from a weekend or a night out, it does add a little bit of comfort in your lifestyle. When you know that you can potentially make this money back. Like I know before I was investing, I was pinching pennies. Like basically I wanted to make the best out of that dollar because I wanted to save. And that's all I was relying on is savings.
Yeah.
But now that I'm investing and I'm somewhat experienced and I know some effective short-term gains that I can make, I'm a little more comfortable. So instead of me grabbing that $5 beer, I'm comfortable to get the $10 wine,
Yeah. Yeah, I think through this process, it's really helped me kind of understand the more details of life. People say, oh, work hard, save money.
Yeah.
But, you can get by on that, but you might just get by, if you're looking for a little bit more, but still willing to put in that risk, because that's always there.
Yeah.
Then, you can get that. And I think it's also kind of my broader view on life is that you should know a lot of as many aspects as to life, It may provide more options, like you said, or at least give you a better understanding.
Yeah. For sure, man.
Yeah, it's a tough call. Like that's really, I could just simply say money, but I don't think it's ever just simply that. It's an easy way to say it, and it may kind of capture, convey the meaning. But there's a lot of, I think when you ask someone, each person, even though they say money, there's something more to that.
Yeah. But I mean, just to be straightforward in a simplistic view, you're right. For anyone that wants to invest, like the intent is to make money.
Yeah.
But it's all about the underlying intent with the money. Are you coming in with any greedy intent, any devilish intent, any ill intent? And of course, that's when it becomes toxic. But yeah, it's just funny. Like I keep referencing back to other episodes, which shows that we talked about a lot. But I remember saying this in another episode, like, to me, investment is all about, long-term growth. Just, having something to look forward to when you grow older, something to fall back on, just certain, leveraging out your wealth. That's it. Like I just said before, if you plan to buy a house or a car pretty soon, you have the money that's right there. Yeah. And then it's comfort buying. Like you invested this amount of money. This is your return. And then this is your reward. And you feel good about it.
Yeah.
And then it's the game part. You see it as a game. Then, if you haven't had any drastic losses, you keep playing it.
Yeah. You're right. I think it's also like, finance is such an important part of your life. You better understand what's going on.
Yeah.
It's kind of like eating and sleeping and feeding yourself. That if you don't know what's going on, chances are, you might get in some trouble, right? And you look around and watch TV, all you hear about is people with financial trouble.
Yeah. Yeah.
So early on, also, maybe that's one of the reasons why it fascinated me, because it ruined so many people's lives.
Yeah.
People that I've known, and even as a kid, I remember, not really understanding it, but you can tell. You go over to your friend's house for a sleepover and you kind of have a feeling, you know, especially later on, you know, like times were good and now times are bad.
Mm-hmm. We should have an episode about that. And
yeah.
The title of the episode should be
sleepovers.
Well, I was going to say something a little more dirty than that. Not in connection to the sleepover, but, you know, the people in turmoil, but like balls deep in the game. That should be the title.
We need to find people
balls
like
deep
like,
in the game.
Really balls deep, you know. Yeah, that's next episode. No.
But yeah, no, I know what you mean. But we definitely should have an episode about that. The adverse effect. Like I know we always talk about like gains and growth and the potential, the benefit of the market, but what are not the benefits? So we have to think about that. Have an episode of why not to invest.
Yes, of course. I think you're right. We gotta.
Yeah, we do have to highlight some of the bad that comes out of it for sure. Yeah, it's important.
Yeah, and I think that's kind of one of the aims we kind of had with the series here is to kind of really shine light on you know, on everything.
Absolutely.
You know, and
the raw and uncut of an everyday trader. Yeah,
you know, because we're not trying to push a product or anything, so we don't need to pretty it up.
Yeah. But it's raw and explicit. Like everything you go through, you're gonna lose money, you're gonna win money.
The good and the bad, like everything in life.
Exactly. Absolutely. Well, Dave, I think that's a good stopping point. We definitely talked a while. Where are we at? 41 minutes. We've been doing good, actually. I feel like every episode kind of been around that time. We haven't pushed an hour yet.
Don't make me do another episode. This guy won't let me leave. We've been here for a week straight.
I know, just cranking it, huh?
Yeah. These have been good, you know, and I'm always amazed at how much we actually just talk about. You know, we're just two guys sitting here. Mm-hmm. We prepare these things, but we don't have a script or anything.
Yes.
So that is, I find it quite amazing.
Yeah, it's beautiful. Yeah, it's just all the thoughts and the creativity you can manifest out of a conversation, and especially with the topics. I feel like it's very structural topics, and we have to make it interesting. And I feel like we do.
That's the beauty
about it. Yeah.
You know,
it's like your first buying experience. You know, let's make it fun. Fuck it. Spin it on hookers.
I'd love to have someone, you know, I mean, we know you're out there. Please step forward. You're more than welcome to come on our show. You know?
Yeah, man. But yeah, I think for the most part, man, we have fun, and that's the cool thing about it, making investing fun.
Let's try to demystify it. Maybe it's been put up there on the high shelf too long. You know, let's take it down and have a good look at it.
Yeah, I love how you said that. I totally agree. Definitely. Cool. Well, This is the Hustle, the Struggle podcast. Make sure you follow our Instagram, and now we have a Twitter at the Hustle, the Struggle. Website and everything else is coming soon, so we're always going to keep dropping new stuff as we keep recording these episodes. So episode 6, why should you invest? I think that's the topic. We talked so long I forgot.
I know.
I'll just play it back from the beginning and I'll remember.
We'll just edit it.
Yeah. But anyways, thank you for tuning in. This is your host Herb and the main man Dave. We love you guys. Love the listeners, and we'll have more. Peace.
See ya.
Thank you, everyone who's here listening. For a disclaimer, we are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help.